Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So, very good morning to all. Today is Tuesday, 17th of October. So, before we start our usual Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And any forecast, prediction or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. Before we start, 1 second. I think the sound quality is a bit muffled, so let me get it sort out fixed first. My apologies. Let me wait. Give me a minute. Yeah. Okay, I'm back. So I hope that the voice quality now is much better. Yeah. Okay, good. Okay, my apologies for that couple of seconds. Yeah, all right. So right now, before the start of any, this is the gist of our daily dose of market insights. Over here is a recap of key events, and key events, it could be corporate news, key geopolitical events, and as well as key monetary policy maker speeches that drives the market, and as well as economic data that was released yesterday in terms of during the European session, the US session, and what are the things to look out for today. And as well as to round up, we will have the short-term technical analysis outlook on the broad-based asset classes ranging from FX, stock indices, and as well as key commodities market. So let's start what took shape yesterday. All right. So let me share my screen over here. So a couple of events that took shape yesterday over here is there's this geopolitical risk premium is still on the rise. Why? Because yesterday, Israel, a defense minister, actually told Washington, that means US, that to expect a long war against Hamas. So potentially, could it be a long drawn out process like what we see right now in the unfortunate events in Russia and Ukraine? Okay, if that's so, I mean, things could get much more complicated in terms of geopolitical tension. It could cause more potential volatility in the financial market, given the fact that right now we have two potentially long drawn out conflict that involves major international relationship stake players, Ukraine, Russia, and right now you have Israel and Palestinian, which is Hamas, and potentially right now Iran has starts to actually come into the picture as well. Especially there was actually a Hezbollah attack on the northern part of Israel that was reported over the recent weekend. So something to bear in mind, to watch out for. And what's interesting over here is as well, yesterday there's actually a negative news flow on the US stock market, where there's this collation by a market intelligence firm stating that Apple iPhone, which is the latest model 15, is selling worse in China than its predecessor in 2020. So they're actually down 4.5% in comparison. All right. So, but however, what's interesting over here is, that sometimes markets don't react as accordingly to this major two negative news flow, but they react accordingly to a potential policy speech, which is by this one called Philadelphia Fed chief, which is Harker. So Harker, he did mention yesterday, was quite dovish. He said that Fed should stop rate increases with small businesses struggling. So that's pretty much of a dovish tone. So that actually causes or a main primary trigger to see a throughout rally in the broad-based US stock indices. So this was actually the heat map of yesterday. So let me hide myself so that you all could see the screen clearer. Okay, so this is the heat map yesterday. All right, almost all in the green, led by the mega cap US stocks, the technology stocks, including of Nvidia and Tesla. So the one that is disappointing definitely for sure will be Apple, only almost unchanged at negative 0.07% due to the negative news flow. But all in all, Harker dovish speech did actually cause this single day rally, where the benchmark US indices rallied by the average by a range of negative a positive 1.6% to positive 0.9%. All right, but what's interesting over here is that even though the market rallied and based on Harker dovish speech, but however, the intermarket relationship, if you look at the longer term US Treasury yield, the 10-year US Treasury yield, that causing a bit of what I call negative feedback loop in the benchmark US stock indices in the last 2 weeks or so, going to rise above the 20-day, acting as a key short-term support at 4.55. So yesterday they actually added 10 basis points, 10 basis points, and today Asia session is going to inch up much higher as well. All right, so given the fact that over here is that the US 10-year Treasury yield is indicating to us that longer term uh longer term in longer term cost of funding will be much more higher rather than lower. Okay, so that could actually be pretty much detrimental to the benchmark US indices as well. So yesterday's rally, what I could see over here is more like a dead cat bounce rather than a potential start of a new we call it substantial bullish reversal in the short term to or to the medium term. Right, so that's my take on the benchmark US stock indices based on the fact of an intermarket correlation with the 10-year US Treasury yield that is still remaining bullish on the that is continuing its short and medium term uptrend phases. All right, so that's on that. So what other news that came out today early morning is okay, in fact, late yesterday is this negative news up from China. As you all know, that whole Country Garden, right? Country Garden is one of the biggest public private sorry biggest private property developer in China in terms of the number of houses that they are being the number of houses in China that being developed by them. So they are actually right now entering into the final hours of a potential offshore bond default. Why? Because in fact today or tomorrow, as either today or tomorrow, October 7 and 18, their grace period for a overdue 15.4 million coupon bond payment is expiring soon. All right, so if you look at this table over here, okay, so this is the bulk of it, 15.38. Okay, so if you look at down over here, there is a series of other grace period that is coming due pretty soon as well. So even though they managed to dodge one at 17 of for today or tomorrow, there's another due one at 27 of October that is much more at 40 million coupon bond, offshore bond that is due, where the expiry it has already been due, and the expiry of that grace based on the 27th of October. So all in all, right, what you could see over here is that we start to see a slew of what I call grace period that is being expiring coming up pretty much soon for this we call it pretty much due coupon payment for Country Garden offshore bond. So what we could see over here right now over here is that if they didn't manage to actually secure a restructuring either today or tomorrow, things could get a bit much more messy for Country Garden. Then for sure markets will be looking at how does the China top policymakers react. And do not forget over here is that yesterday the PBOC did actually cut the one of the benchmark interest rate, which is the 1-year medium-term loan funding rate. So that is actually a benchmark rate that is used to actually gauge the prime rate for mortgages as well. Okay, so if they didn't cut that particular rate, usually the prime mortgage rate traditionally they will actually maintain unchanged, which is actually the decision is due on Friday. So given this key important event that is taking shape, For now, I do not see any news out yet that is the China policymaker making any changes, sudden changes. For now, which is potentially could be pretty much negative at this point in time, where we start to see the CSI real estate index actually down negative 2% intraday. So with that, right, if you look at the current US CNH rate, that means against the offshore yen, the dollar against the offshore yen, now it's trying to actually break up above the intermediate resistance that is in place, the range resistance that is in place since the start of since about close to about 4 weeks already at 7.3165. It's time to break up above it, but holding above steady above this 50-day moving average, I think, as a support level. So for sure, if you start to see a clear breakout above 7.3165 later today, potentially we will start to see another leg of bullish up move for the dollar CNH, which does not actually bode well for China equities as well as China proxies, as per based on their we call it indirect significant correlation. So for sure, we start to see a very lackluster movement as of today for the Hang Seng indices as well. So later I'll cover on the short-term technical outlook for the Hong Kong 33 index. That's pretty. That's for our platform. Yeah. Okay, then other than that, we have very interestingly RBA. So RBA minutes just released a while ago for the minutes. That means this RBA minutes for the prior just concluded a month ago RBA meeting. So the minutes seems to be a bit much more hawkish as per se. Why? Because they has this mention about this one called low tolerance for sticky prices after pausing rate for about three consecutive months. So and it also did mention that the current home price surge may mean that policies less restrictive than thought. So overall, it's rather a dovish policy as per se. So later we take a look at how the actually FX market actually perform after this dovish pardon me, after this rather hawkish we call it verbs that's being used that's being discussed during the RBA minutes, okay, on the previous monetary policy meeting. All right, so this is the key events and news flow that has really taken shape that impacted the market. So what are the key events to look out for today? So for today, right, in the European session, we have economic sentiment data up from Eurozone at 5 p.m. Singapore time. And as well as you have the unemployment rate much earlier, 2 p.m. Singapore time for UK. Okay, let me expand my screen so you all could see clearer. And also for US, right, you have another Federal Reserve official speaking, Fed Williams speaking at 8 p.m. Singapore time. Then for Canada, you have the inflation rate that's out at 8:30 p.m. Singapore time. So what we do expect over here is that the inflation rate for September is almost the same. Consensus is expecting as 4% year on year, similar with the one that is recorded in August. Then important data for US will be at retail sales, month on month. Retail sales market is expecting a rather weak number, 0.3% month on month. Down from 0.6% that is printed in August. So that's coming in 8:30 p.m. Singapore time. And to round up, we have two Federal Reserve officials speaking again at 9:30 p.m. Singapore time, Fed Bowman, and as well 10:45 p.m. Singapore time, Fed Banking. All right, so much more of a Fed speak during the US session. All right, so now let's take a look at the FX market. All right, so if you look at the FX market right now, if we could take a look at the data over here. Let me share where's the data. Okay, should be this one. Let me refresh it. Pardon me, because my internet broadband was currently a bit of hiccup a while ago. Yeah, it's coming up. All right, so this is the 5-day rolling performance as of today. So it moves every day. Okay, 5 days as of today. So what we could see over here, very interesting, right? The data, just to make sure that it's 5 day, is at this point in time, the dollar starts to actually trade sideways against the other currency. What I see over here is against the sterling, the Japanese yen, the euro, the CNH is sticking up slightly, and the Canadian dollar remains weak. And for sure, the Swiss franc continue to remain a safe haven currency that is strengthening against the dollar. So yesterday we featured one of the cross pair, Swiss yen. So that if you could recall that, you could take a look at. I will just highlight again on the Swiss yen outlook. We have a bullish bias, short-term bullish bias condition due to that currently a persistent safe haven status of the Swiss yen. Okay, so what's interesting over here is the dollar continue to strengthen against the Kiwi instead. So perhaps we could look at some of the cross pair that involve the Kiwi, the New Zealand Kiwi, to look at for what I call a potential technical short-term technical setup. And what we could see over here is, yeah, the dollar also starts to decline as well against the Aussie after that. We call it a rather hawkish verb that is being used in the RBA minutes that I actually highlighted earlier on. Okay, so now let's touch on the major pair first, the euro dollar and the sterling dollar, before we jump into a potential Kiwi cross pair. Yeah. So going forward over here is, let's take a look at the euro dollar. So if you look at the euro dollar, yesterday we do expect a short-term bounce. Why? Because of that oversold condition on the hourly RSI. And bear in mind, do not forget over here is that yesterday, yeah, despite that short-term bounce, we do have a short-term pivotal resistance level to maintain this potential bounce, which is at 105.95. So right now we see a bit of bearish reaction of this 20-day moving average that is acting as a resistance as well, slightly below the 105.95. So we are still maintaining that short-term bearish bias on the euro dollar. So looking for at least a retest on last Friday minor swing low that confluence with the previous 4th of October and 6th of October low as well at 1.0490. All right, so still maintaining that short-term bearish bias condition below 1.0595, which also confluence with the medium-term descending channel upper boundary that is in place since the 18th of July. Okay, but however, if you start to see a breakup with an hourly close above 1.0595, then this short-term bearish bias condition will be evaluated to see a squeeze up to retest the 11th of October and 12th October minor swing high area at 1.0635. Okay, so that's for the euro dollar. So on the sterling dollar, pretty much interesting configuration as well. The bounce, actually we are the short-term bounce. So the short-term bounce did get mitigated right at the 1.2240 key short-term pivotal resistance that we highlighted yesterday, and also reacted off this 20-day moving average acting as a resistance as well. Which is close to that 1.2240 key short-term pivotal resistance that we highlighted yesterday. So still no change, still looking for this short-term bearish bias condition as long as 1.2240 key short-term pivotal resistance is not surpassed to the upside, looking for a retest close to last Friday's swing low area at 1.2110 on the sterling dollar. However, if we start to see a clearance of hourly close above 1.2240, then this short-term bearish bias condition will be invalidated to see a squeeze up to retest last Wednesday and Thursday minus swing high area at 1.2330. All right, so that's for the major FX pair. So very quickly, if you look at one of the look at the FX crosses that we do highlighted yesterday, okay, will be the Swiss yen. So yesterday, the Swiss yen, we do have a bullish bias condition holding above 1.6475. Price indeed continue to shape up higher high and now approaching very first the resistor at 1.6660, which is the 22/30 August 2023 swing high area. So with that, RSI still holding above the 50 level mark. Okay, so indicating to us that there's no clear signs of a bearish exhaustion, no bullish divergence seen as well on the RSI. Price action trade higher high. The RSI also going to do higher high as we've seen over here. So all in all, right, this short-term bullish momentum still remains intact on the Swiss yen. So what I could do over here is that I will tighten the key short-term pivotal support instead of using 1.6475 for today, because price action has already started to move up higher on the upside. So prudently, we should be tightening the key short-term pivotal support level. So let me put it in. So instead of 1.6475, we'll be using this area here as my key short-term pivotal support, which is also very close to the lower boundary of this minor ascending channel that is in place since for October low. So let me remove this one. This will be removed. So this level will be at 1.6520. All right. So using 1.6520 for today to maintain that short-term bullish bias that we have on the Swiss yen that we highlighted yesterday, looking for a test again, a push up towards 16660. Above it sees the next resistance at 1690/16830. However, if we start to see a clearance with an hourly close below 16520, then this potential, this short-term bullish bias condition will be invalidated to see a test right now at once, a slide towards 16475, and even much deeper towards 16360, which also confluence with the 20-day moving average. All right, so still maintaining that short-term bullish bias on the Swiss yen with a tightened key short-term pivotal support for today. So the next pair I want to highlight over here that involves the Kiwi dollar. So you know that the Kiwi was actually weak against the dollar. So if I were to pair it with the Euro Kiwi cross pair, that means we're talking about the Euro/NZD. Very interestingly, right now over here, we could see the price action managed to actually shape this short-term bullish momentum with the clear breakup above the 20-day moving average. So bear in mind, in trading view, we are able to overlay a longer term time period moving average into a shorter term chart like what I did over here, 20-day overlay towards a hourly Euro Kiwi chart. So this is not a 20-hour MA, it's a 20-day MA, so I could do a multi-time frame analysis on a single chart. It saves me the hassle of switching chart. So for sure, with a clear breakup and a retest at the 20-day moving average, we start to see at least the birth of a potential short-term uptrend phase for the Euro Kiwi cross pair. So with that, I'll be using the lower boundary of this short-term ascending channel that is in place in 11 October at 17820. Key short-term pivotal support level, looking up for a further potential push up to test the next intermediate resistance at 17981 8030, which confluence with the upper boundary of this short-term ascending channel, and as well as the 50-day moving average that is acting as a resistance as well. Right. However, if we start to see a breakdown, hourly close below 17820, then this short-term bullish bias condition will be invalidated to see a slide to retest that 20-day moving average acting as a support at 17740, then slash a psychological level at 177 figure level. All right, so having that short-term bullish bias condition on that Euro Kiwi cross pair. Okay, so that's pretty much sum up for the FX market. So let us now zoom on immediately to the stock indices. Okay, stock indices. Okay, so let's start off with the Asia indices first, which is the Hong Kong benchmark over here. So for Hong Kong over here, what we could see over here is that it's pretty much sideways. So what we could do over here is price actually didn't break below the 1760.80 level. So given the fact that over here is that price is now yo-yoing between these two levels, so what I could do over here is that, yeah, we know that we have a negative news flow that is coming up, which is the Hong Kong, the China aggregate news. So I would say that to be prudent, I would rather stay like a sideways neutrality range for today between 17,880 and this level over here, 17,680. All right, so neutral between which is also the 20-day moving average. So yesterday it didn't, during the US session, it failed to break up above the 17,880 level as well. So for sure, these are the two key levels to watch out for today, 17,880 and 17,680. So flipping to a neutrality sideways bias for the Hong Kong 33 index for today, which is the Hang Seng index. So unless we have an hourly close below 17,680, then potentially we could validate at least a short-term push down towards the next support level at 17,450/17,320. Then on the flip side, an hourly close above 17,880, then potentially we see a push up to test the 50-day moving average, acting as a resistance at 18,145. All right. So that's for the Hong Kong 33. So flipping to a neutrality stance for today, German 30, no change, still maintaining that short-term bearish bias. Still recall that yesterday we do have a short-term pivotal resistance at 15,410. Price action managed to managed to store at this intermediate resistance at 15,280, which pretty much close to this downward sloping 20-day moving average, I think, as a resistance as well. So I do not want to have a so tight key short-term pivotal resistance for today, so still maintaining it at 15,410. Looking for at least a push down to retest this minor range support level, which was Monday's swing low, which yesterday's swing low, 15,090 slash 15,045. All right, so still maintaining that short-term bearish bias, pardon me, on the German 30 index. Okay, the US indices, yesterday, even though you see a squeeze up on the S&P 500, but it managed to actually react off the upper boundary of that short-term pivotal resistance that we highlighted at 34,055 level. Okay, 34,055 level. So still maintaining that short-term, we call it bearish bias on the Dow Jones Industrial Average, which is the US Wall Street 30, we call it in our platform. So overall, I'll be having a lower short-term support level for today, which is at this 33,690, which is also the 20-day moving average. Now turns into a pullback support in the short term. So that's the short-term bearish bias condition for today. Then, however, if we start to see a clearance of hourly close above 34,055, then this short-term bearish bias condition will be invalidated to see the continuation of this counter trend rally to squeeze up to retest the 50-day moving average, I think, as a resistance, also at very closely at this 33,370 level. Okay, so that's for the Dow Jones Industrial Average or the US Wall Street 30. Nasdaq 100, yesterday's price action on the hourly chart managed to react right exactly at the tighten key short-term pivotal support that we have for yesterday at 15,240. It did a bearish reaction, so still no change, still maintaining that short-term bearish bias on the Nasdaq 100 below 15,240. So today's short-term bearish condition, I do have a tighter short-term support level, which is at the 50-day moving average right now, 15,070 level. So that is my short-term support level for today, to make for this bearish bias condition on the Nasdaq 100. But however, if we start to see a hourly close or clearance above 15,240, then this short-term bearish bias condition will be invalidated, i.e. to see a squeeze up to retest last Thursday's swing high area at 15,355. Okay, so that's pretty much sum up for the benchmark US stock indices. So lastly, I want to touch on WTI crude oil. So WTI crude oil, West Texas crude oil over here, we do still have a short-term bullish bias condition, but yesterday we do expect a pullback below the 88.60 level. So this pullback indeed takes shape. Why there's a pullback? Because there's this potential bearish bias divergence that took shape on late last Friday. So what we could see over here is that the price index of the RSI now is almost has really fulfilled this bearish bias condition, and now start to inch downwards and coming very close to the oversold level. And also the price action is now pretty much coming very close to the 50-day moving average as well. That is, I think, as a support. So what we could see over here is that we will be using the 85.30 level as my key short-term pivotal support level to maintain that short-term bullish bias condition, to see at least a retest in short term at 88.60 for the West Texas crude oil. But however, if we start to see an hourly close below 85.30, then this short-term bullish bias condition will be negated to see a further slide to retest last Friday key swing low area at 83.20, which also correspondent to this we call it a gap up in the futures pricing on last Monday as well. Okay, so still maintaining that short-term bullish bias condition on the West Texas crude oil, and due to the fact that the minor pullback that was seen yesterday is coming very close to a reversal point as well for the West Texas crude oil, potentially, as long as 85.30 key short-term pivotal support holds. So with that, that pretty much sum up for today's daily dose of market insights that I'll share with you all, and I wish you all a good day ahead, and we shall speak again tomorrow. Thank you.